quick question: is CarGurus a buy, sell, or hold? Don't guess. Let's calculate. Our DCF model will tell us exactly what CarGurus should be trading at. Here we go. Now let's understand what CarGurus actually does. CarGurus operates an online automotive platform for buying and selling vehicles in the United States and internationally. It operates through two segments, U.S. They're a consumer cyclical company with a $3.7 billion market cap. With this business context, let's see what the valuation analysis reveals. Alright, here are the numbers. The current price is 36.22, but our DCF analysis shows the intrinsic value is 24.68. That's a 31.8% difference, and let's break down how we got there. Let's break down our growth assumptions and how we calculated them. We're using a weighted regression of historical and Wall Street analyst consensus estimates, which incorporates forward-looking growth expectations from professional researchers. We start with 11.1% initial growth for 5 years, then gradually taper to 2% terminal growth over 10 years. Our EBITDA margin assumption is 15.7%, reflecting historical operating efficiency. Our WACC calculation starts with Professor Damodaran's industry unlevered beta, which we re-lever to match the company's capital structure. This gives us a cost of equity of 7.8%. The after-tax cost of debt is 3.2%. Together, these result in a WACC of 7.8%, which we use as the discount rate in our DCF valuation. Now let's see how these assumptions translate into cash flows. We start with high growth of 11.1% for 5 years, then taper down over 5 years to our 2% terminal rate. This creates a realistic growth trajectory that captures the company's maturity cycle. Final valuation results: $2.5 billion enterprise value, with 60.9% from terminal value. After minus $111.4 million net debt adjustment, equity value is $2.6 billion, giving us $24.68 per share. Based on 2% terminal growth and 7.8% discount rate. Here's where it gets interesting: sensitivity analysis. Our 24.68 valuation depends heavily on the 11.1% growth rate and 7.8% discount rate. What if these assumptions were wrong? Visit Stockoscope.com to test different scenarios and see how the valuation changes. And that's how we value CarGurus using DCF analysis. Ready to try it yourself? Visit Stockoscope.com to run your own DCF models on any S&P 500 stock. The platform lets you tweak assumptions and see immediate results. Subscribe for more stock valuations and give this video a thumbs up if you learned something new.